Hello and welcome to this week's episode for Spy Trader Now. I am your host. My name is Ken, and our model portfolio is up 12.14% year to date as of July 13th, 2024. Our stock market strength color signal, oops, it says yellow there, sorry, is green. As you can see here, it is green. And that is where we currently lie. Our goal here is to beat the returns of the S&P 500 buy and hold investor. Their portfolio is up 17.82% year to date. So we are lagging behind them, and I'll show you that in the presentation. Last week, the S&P 500 gained 0.96%. Now, we do have a little bit of a negative divergence going on here. You can see on the MACD, on the volume is tapering off, but we continue to advance in the S&P 500. Last week, we made no trades. Here are the trades that we've made so far in 2024. If you want to see all my trades going back for the last 3 years, you can head over to this link. It will be down in the description down below. We have 3 open positions right now. We currently hold 200 shares of SPY. We're very profitable by $14,000 in that position. I also have an in-the-money covered call, and on those 200 shares, I am currently upside down because the market has advanced and the call premium has advanced at the same time. And with that, if I was to close it out, then I would be upside down. Keep in mind, I don't have any intention on closing it out. I'm going to ride this through all the way to its expiration date of 10/18/2024, which is when the summer doldrums are just about over. So that's my expectation. So we're not going to be taking that loss. We're going to be holding this position this entire time. The only time I would close out this position is if the stock market was to correct about 10%, and this position here would become extremely profitable. So in other words, I'm going to close it out and at a lower price than when I sold it. Now I sold it at $63. It's currently worth $79. So it's gone up a lot. But like I said, I'm not going to do that while I'm upside down. And we also have one put position. Now, because the market has advanced on that put, I am upside down on that one as well. So we are losing $256 if we were to close out that position. I am not going to be closing it out. I'm going to be leaving that position open because this position has an expiration date of 6/20/2025, where we went out a whole year. I have an expectation that within the next 3.5 months, we're going to be pulling back 5 to 10%. And at that point in time, this will be a profitable put position. So we're just going to hold that. Not only that, when I don't close out the in-the-money covered call, I'm getting time premium. That time premium more than pays for this cost of this put. So ultimately, this put will not be costing me anything. Basically, if the market continues to advance between now and my expiration date 10/18/24, I'm going to lose out on those future gains. But if the market corrects down, I will collect. I'll be doing better than the S&P 500 because I'll be making money while the S&P 500 is losing money. But I'll be about 12% in 10/18/24 if the market continues to advance. If the market continues to go sideways, I'm still going to collect that time premium, and I'm still going to be somewhere around 12% between now and the expiration date 10/18/24. If you want to see how I do that, go ahead and hit that like button, subscribe to my channel, and ring that bell. Okay, now here is our model portfolio in blue and the S&P 500 equity curve in pink. Now, because of the trading that we took on a week ago, we're going to make money if the market goes down. But right now, last week, the market went up 0.96%. taking the S&P 500 to very close to 18% year to date, and we are somewhere around 12% year to date. But if the market starts to do this, we're going to start going in the opposite direction. And then we'll be beating the S&P 500. Our goal is to beat the S&P 500 by the end of the calendar year. Okay, now we are looking at a 6-month daily candlestick chart for the S&P 500. And you can see a little bit of a negative divergence here with the MACD as well as the price action of the candlesticks right here. But so far, pretty much bullish. Now, you started to see the market start to possibly crack on Thursday with that big red candle. Look at the last time you had kind of a big red candle there and you had a little bit of a downturn, but market was strong. It came up and it retested and went slightly higher, but then closed in between here. Now we're looking at a ratio chart of the NASDAQ 100 to the S&P 500. And we were here in the stratosphere and we have since started to back off, showing a little bit of the beginning of a risk-off move here. So we're starting to come down on the MACD and the slow stow, showing you that the market should be having some soft to sideways action according to this ratio chart for the next week or so. Now we're looking at the VIX Volatility Fear Index, and we are at rock bottom low. We are here in the ultra low range. The low range is between the two green lines, and then the upper range, which is more bearish, is up here above this green line or above 20. We are sitting at 12.46. We're right here. We're very low. MACD is just slowly grinding upward, and the slow stow is bouncing around, telling you sideways action, which generally speaking is bullish for the S&P 500, which is here in dark blue. Now, here's one of the reasons why I am looking at some bearish action over the summer doldrums, which are August, September, and October. We're about halfway through July, where we have 100% probability of closing higher. We've already accomplished that goal. The month is higher currently, but then you fall off of a cliff going back 5 years on a seasonality basis, and then 10 years. You've got very low or much lower probabilities of closing the month higher. And then in September, you're all but guaranteed to have at least one negative month. Well, not a guarantee, but for the last 5 years, that has happened every single September. So we'll see what happens, but that is why my strike, the expiration date on my in-the-money covered call is October 17th, right towards the end of the summer doldrums. So my portfolio is going to be a little bit boring going over the next 3 months, unless this market does indeed start to lose steam, starts to go south. Then you're going to start seeing me be much more profitable than the S&P 500, and I'll probably take on some more put positions as well. Okay, now we are looking at a 3-year weekly chart for the S&P 500. I've got my cycle brackets drawn in here at the bottom with the major and the minor cycle brackets here. And you can kind of see that this low represents that low there. And this one has been yet to be determined. This is still an unknown of when this low is going to kick in, somewhere around here. Now, I've also drawn in this red zone here, which is indicating the target zone. Well, we are already at just about at the 61.8 Fibonacci extension on this chart. So that is telling you that you've kind of maxed out how much profit you have a reasonable expectation to accept on this cycle that's happening right here. In addition to that, we have the standard deviations, +2, -2 in gold, +1, -1 in pink, and the regression line is this dashed green line there. All right, let's switch over from the 3-year weekly and go to a 1-year daily, and let's change our cycles to the 1-year daily right there. And then we'll just blow that up a little bit and then bring this drawing down so we can kind of get a better look and feel as far as what is happening here. Now, on looking at it on the daily chart, you can kind of see your cycles here. This one here is a little confusing, but kind of whether you take the cycle from here to here and here to here is kind of like what we're looking at. So that would be one cycle low, cycle low, cycle low right there, corresponding with that one, corresponding with that one, corresponding with that one right there. We also have the Fibonacci extension going on right here as well. And we're just about hit the 78.6 on this chart that we see right here. So a little bit of we've gotten most, if not all, of the move that we should be expecting for this rising cycle right here. Now, we could still squeeze out a little bit more. We could even come all the way up to the 100%, which would be incredible. But then you would start to taper off and come back and pull into your cycle, pulling down like that. So when this comes up here, and we're still a few weeks away, more towards about the end of the month or towards 8/12, somewhere in there, you kind of see that right there. Well, then that's about how much time this cycle is going to last, and then we hit the summer doldrums. All right, now here is a chart that I developed to determine the health and strength of the market, which is just an Excel spreadsheet, and here's the information that I derive into the cells here in order to come up with some totals and percentages to help us get an idea of just using a red, yellow, green signal to determine how strong everything is. Now, these are different asset classes, various asset classes up at the top: stocks, bonds, precious metals, emerging markets, and overseas and stuff like that. And down here is the 11 sectors of the S&P 500 broken down for each sector. Now, on the top section, asset classes, you can see that last week we were at 76, this week we're at 85, so we're still in a healthy green and getting stronger across various asset classes. More importantly, on the 11 sectors of the S&P 500, last week 59, this week 80. That's telling, and look at all the green. I put green in here when we have 5s and 6s on the asset class or sector strength. When the more green you see on the screen, the more green you are going to see going long in your portfolio. So this is telling you that things are starting to broaden out. So with this information, I may want to be taking on a call just to help offset my put position, at least for the next 2.5 weeks, because the summer doldrums technically haven't started yet. So I am considering that, but considering how top heavy and how much juice there is left to squeeze out of this market, I'm a little hesitant to do that. But if the market shows signs of strength and makes higher highs, well, then we do want to be long this market. I do not want to close out my in the money covered call, because I don't want to go take a loss on that. No reason to. I'm going to sit through the summer doldrums. But I do want to take profit if the market is going green and going to be positive. I do want to participate. So I will consider leaving all my positions in place and taking on, in addition to that, 1 or 2 long calls. Now we're looking at the 1-year chart for the 10-year Treasury bond yields. Bond yields have dropped down. S&P 500 is in dark blue. TLT is 20-year bonds, which have also risen. S&P 500 has risen while bond yields have dropped. As long as yields stay down or near this green line here, 42, we're at 41.89 right now, well then the market and TLT, 20-year bonds, will like that. If this starts to go up like it did from here to here, well, you'll see that TLT, which is much more reactionary to the bond yields, dropped like a rock. Now, the S&P 500 took a little bit of a sideways action during that time, telling you how strong that action was. Technically, it should have dropped even more than it did, but it didn't because of the strength of the S&P 500. Now, you've got slow stochastics with energy down here in an oversold condition at 20, and MACD below the 0 line telling you you've got some energy to pop up. Okay, that's going to wrap up this video. As of July 13th, 2024, the market summation, according to me, Ken, your friendly host for SPY Trader Now, we know that the market strength is increasing and the market up strength is broadening out. We now have a green signal as shown right here, and the summer doldrums are starting in August till the end of October. Our positions are set to profit off of a market pullback, but we are missing out on market gains till we close out that in the money covered call, and I explained that to you. If the market starts to decline, I will take on another put. Let me say that I probably will take on another put. I want to see the market action before I make any decisions. Right now, the market is not going down, but it is going up. And if we're going to stay in this neighborhood, I'll be taking on another call before I do anything else. So that's going to conclude this video. I hope you got some valuable information out of it. If you have not done so already, smash that like button down, subscribe to my channel, and ring that bell. I thank you and wish you good trading.